Hi, thanks for joining me again. We're going to look at some more charts that are showing supply being drawn out. On this chart in front of us, a weekly chart of BRU, you can see there are three small price spikes. And there's some supply being drawn out in this chart. And then if we travel along a bit further, price consolidates for a while sideways. And then we see a large upthrust on very high volume. Now, generally, an upthrust is a secondary or confirming indicator of supply or weakness. But sometimes, especially when it's on very high volume, an upthrust can be a primary indicator of weakness. And in this case, it certainly is. It's very high volume and there's an immediate response to the downside. A little upthrust to follow, again on quite high volume. If we mark the low of where support came in after the initial upthrust, you can see price broke down and a slight increase of volume after a little period of stabilization and continued lower from there. This is a case where an upthrust is a primary indicator of weakness, not a secondary or confirming indicator of weakness. So this is one to take notice of, a very high volume upthrust like this, particularly one that shows an immediate response to the downside, confirming in some ways the weakness. It's worth remembering that one. Now the next one, it's BEN, Bendigo and Adelaide Bank, on the daily chart. You can see price has been rising steadily for quite a period of time. I think there's a good price rise before that as well. And then price moves higher, not with very much volume, but with increased spread, and the next bar being down, seriously down, next two bars being down seriously on increasing volume. Now, this was likely a change in sentiment, an announcement that the market didn't appreciate, but it's a change in sentiment. The market's dumped. There might have been a little bit of knowledge prior, and they've pushed it up. The market's been pushed up as much as possible the day prior to set some shorts and sell some stock, and then price has been dumped. This is a bar that's showing a dump. And in some respects, this bar is showing a bearish reversal. If I clear that off, a bearish reversal is an up bar with increased spread, with the next bar trading just above the highs of the previous bar. This is textbook perfect. And then closing below the lows of the initial up bar. Now, it's a bit of an exaggeration on this one. Generally, you'd find the close more just below, with the next bar being down. But it is an example of a bearish reversal, and it's confirmed by the series of down bars which followed. There's no ability for price to recover whatsoever, not even an attempt for price to recover. And then you'll see that price gapped lower again below where there was some support found in the market. Price was obviously going to continue lower for a period and likely did after that. The next one is at the end of a big uptrend. Price in this stock had been uptrending for quite some time, and although that doesn't look like very high volume because it's been scaled for the following volume, that was very high volume at the time, really high volume, and price accelerated higher and the news was strong that things were going well and prices were going to the moon. But the very next bar was on almost exactly the same amount of volume. It initially went higher, it went up like that. But then for the next two bars, it went down, and down here, the next two bars were on increasing volume and still very high volume. Then you had a bar which closed below halfway on extremely high volume. It closed as an up bar, so there were still buyers in the market, but look at the volume on this initial up bar, and the next one we're looking at here was more than double the volume. It couldn't make new highs, and it closed below the halfway mark on the bar. There was supply in this market, serious supply in this market. You can see the next bar also tried to go higher and close below mid bar on still very high volume. Price then dipped lower. We've seen here that support came in here, and then price pushed below. Here was the breakdown bar. It was then unable to recover back above that line. There was a couple of little attempts, and then price headed lower from there. And I think it headed a lot lower, if I remember rightly. In fact, we might just have a quick look. It headed down almost to zero. 6 cents. And we were looking at it at $1.75 up here. So you can see here, price accelerated higher, supply came in. This was likely a predetermined sale after price had been rising for some time. It had come from 11 cents. It had moved up to $1.75-ish, and then went back to 6 cents. This was profit taking, no doubt about it. Now the next one is interesting. Look at the similarities. Another weekly chart, a widespread up bar with the next bar down. Looking where we were before, the similarities, widespread up bar, similar bar down, and still quite high volume. Now, while they look very similar, they're not very similar at all. This one that we initially looked at had been in an uptrend for quite some time, many weeks, and profit taking was ready to come in. Those who had bought low and initiated the markup in price were ready to sell and take some profits, whereas this stock is coming off a base of 1 cent and is initially breaking out. Now, there may be a period of time where price needs to consolidate on this chart, and you see price consolidate sideways within the range of this up bar. This up bar's got a gap up. It continues to there. But after a period of consolidation, whether it be short or long, I imagine the breakout will continue on this stock. It's not the same context as this stock, even though the two bars look very similar. This stock had been in an uptrend for quite some time. This stock is just breaking out from a base. Now the next one is some form of reversal. You can see this is GXY on a daily chart. Price had been in an uptrend on this stock. Price had been uptrending, but I don't remember exactly what the reason was, but this is like a change in sentiment, a dumping of price, and you see that there was a slight recovery because after a long uptrend, the market believes it will recover. But if you look at the up bars in response, there was no power in them. They had lowish volume or average volume. It was struggling to recover. There was another breakdown bar and then a gap down from that breakdown bar. It was really struggling to recover. Supply had come in. Those who had been supporting the market and defending against supply had left the market. You can see price then tried to push higher again. Here was a push higher. In fact, it was above average volume, so there must have been supply in there. And then the secondary push 4 bars later was weak, had low volume. It wasn't going to recover, and price moved lower from there, much lower. The last one I've got is SRMN on the daily chart. Now, you can see that price had been making some highs, but it was recovering and still continuing higher, albeit with reduced thrust higher. You can see price wasn't really making a lot more ground. There was a shortening of the thrust higher. This was the thrust higher, this much, then only this much, and then only this much. Thrust was shortening, but look at this. Massive volume, narrow spread up bar, relatively narrow spread relative to the amount of volume. Volume and spread are often hand in hand. They are similar. So if you get very high volume, you expect very wide spreads. And this was a relatively narrow spread compared to the amount of volume. The close was mid-bar on the traded volume, but if you put in the rest of the range, it did close in the top half, albeit off its highs, but the next bar was down, and you can see that there was very little attempt to recover. This was serious supply coming in, really serious supply. This was a buying climax, if you want to put a name to it. There'd been some selling prior to it, but this was a buying climax. A relatively narrow spread up bar closing off its highs on very high volume, with the next bars in response lower. No attempt to go get higher. The only attempt to move higher was this very weak volume here. Extremely weak. There was no demand whatsoever in response. The market then broke down further, and it was pretty much all over. And if you look again, price attempted to consolidate in here, but then broke down again here. There was a couple of more attempts to regain the lost ground, but price again broke down, and I think price went considerably lower on this stock too in response. It continues to go lower. That's where we were. So there's no doubt that when you see something like this, you need to be very careful. This was supply coming in. You already had some idea that supply had begun because there was shortening of the thrust. But if you look at the volumes, it wasn't too serious. Volume had been increasing, but it wasn't too serious. But this was a massive dump. I imagine that there was a huge news item, and this company was going to make massive profits and pay huge dividends, and the demand in the market was huge, and those who had been marking price up for a long time chose to use that moment, all that demand that was created, to sell into the demand take profits, and move on. And you can see it's quite obvious that price never, ever looked like it was going to recover. There was a couple of little attempts to recover, but they were fairly weak. And from that point on, price was headed lower. Okay, that's my lot. I moved through it pretty quick so that we didn't drag on too long. Hopefully you get something out of that. Thanks for joining me. See ya.